tax is a compulsory financial charge or some type of levy imposed on a taxpayer. A taxpayer can be an individual or a legal entity by a government organization in order to fund government spending and various public expenditures. Our taxes are used by the government to fund different government activities or projects. For example, building roads, bridges, and government hospitals. Also, our taxes is being used to support our people financially if they are in crisis. They experience typhoon, earthquakes, or even pandemic. Simply, a tax is a money that people have to pay to the government. An income tax is a tax on all yearly profits arising from property, profession, trades, or offices, or as a tax on a person's income, emoluments, profits, and the like. When an employee earns their salary, income tax is being applied, and that will be the amount that employee will be paying the government. A taxable income refers to the base upon which an income tax system imposes tax. So, the income tax will be dependent on the taxable income of an employee. So, the higher the salary of an employee, the higher the tax is. Income tax is equal to the employee's gross income plus additional pay. Additional pay may refer to the commission or overtime pay that the employee receives, minus deductions, whatever deductions that the employee incur. For example, late and tardiness, or if an employee made a financial advance on their employers. And the mandatory contributions set by the government. The Philippines has mandated these employee benefits and contributions. And these are the SSS or the Social Security System. SSS was created to provide private employees and their families protection against disability, sickness, old age, and death. The PhilHealth. PhilHealth is administered by the Philippines Health Insurance Corporation and provides employees with a practical means of paying for adequate medical care in the Philippines. And the Home Development Mutual Fund, or also known as the Pagibig Fund, is a provident savings system supplying housing loans to private and Philippine government employees and to self-employed who elect to join the fund. So these are the different deductions under the computation of taxable income. Now let us try to compute the taxable income, the income tax, and the net pay of an employee. Let us consider this problem. Marvin is a sales manager in ABC Merchandising Company. His monthly salary is $28,400. How much is his taxable income, income tax, and net pay for the month? So we will start with the gross income of Marvin, and it is $28,400. Take note ha, $28,400. So his gross income is 28,400 pesos. Now, there is nothing more for an additional pay that is indicated in the problem, so we will stick to the gross income alone, the 28,400, and then we will proceed to the deductions. There are no other deductions indicated also, so we are just going to focus on the mandatory contributions and benefits, beginning with the SSS contribution. Now, for the SSS, we will be using a table for the 2021 set by the company. Now, this is a new table that we are going to use for this year. Remember, his gross income is 28,400. So, we are going to look for his salary range. In this table, the 28,000 can be found on the last row that reads 24,750 and over because it's 20,400. And then we are going to look at this part under this column because this is for the employees. So the Marvin's SSS contribution is equal to 900 pesos. Next, the PhilHealth. To compute for the PhilHealth, take Marvin's gross income of 28,400 and then we are going to use this table. Effective December 7 of 2019, PhilHealth implements its new premium contribution. And for 2021, we will be using the 3.5% premium rate. Marvin's salary or gross income is 28,400, so it is within this range. We will use the 3.5%. We will multiply his gross income by 3.5%, and then we are going to divide it by 2. Now, why do we need to divide it by 2? Because half of the contribution will be paid by the employer. So, 28,400 times 3.5% divided by 2 is equal to 497 pesos. Okay? Now, the last is the pagibig. For pagibig, we're going to use this table for 2021 also. Now, his salary is 28,400, so it is over 1,500. The employee share is 2%. The employer's share is 2% also. So, we will be using the 2%. So, you are going to multiply 28,400 by 2%, and that is equal to 568. So far, these are the only deductions for Marvin for this month. We are going to add all these 3 deductions, and that is equal to 1,965. Now, to compute for the taxable income, we are going to subtract the gross income to the total deductions, and that is equal to 26,435. This is Marvin's taxable income. Okay? Next, after computing for Marvin's taxable income, we are now going to compute for his income tax. For solving the income tax, we are going to follow 4 different steps. So, step 1, we need to multiply his taxable income by 12. So, step 1, multiply taxable income by 12, 26,435 times 12 is equal to 317,220. Now, step 1 is very important because this will tell you if Marvin has an income tax or none. Because according to this income tax table under train law, if your annual income is 250,000 and below, there is a 0% tax rate. So if the income of the employee is below 250, we are not going to apply any tax rate on his salary. But since Marvin's annual is equal to 317,222, it is above 250,000, he is taxable. So 317,000 is within this range. So his tax rate is 20% of excess over 250,000. 20% tax rate. Take note. Let's go back to our computation. What is our step 2? Step 2 is we have to subtract the 317,000 by 250,000. Subtract your answer to the minimum value of the salary range. The minimum value of this range is 250,000. So we are going to subtract Marvin's annual to 250,000. That is our step 2. Step 3, multiply the difference to the respective percentage of that salary range. The percentage given is 20%. So 317,220 minus 250 is equal to 67,220. Step 3, we are going to multiply that to 20%. Times 20%, it is equal to 13,444. Next, step 4, divide your answer to 12. So let us divide 13,444 by 12. And the answer is 1,120.33. This is Marvin's income tax. Next, let us compute for the net pay. The net pay is equal to taxable income minus the income tax. So net pay is equal to taxable income minus the income tax. Marvin's taxable income is equal to 26,435 minus the income tax of 1,120.33. If we are going to subtract these two, the difference is equal to 25,314.67. This is Marvin's net pay for the month.